Hey guys, Scott here. We have a really interesting situation in gold, which I thought I'd run by you. Okay, as usual, the first thing we do on any chart is we try and decide, is it a trend or is it a trading range? Now, what we can see here is that previously it was clearly a trading range, with the upper boundary here and the lower boundary down here. Goes up, goes down, goes up, goes down. It breaks out. This bar here. Complete rejection of the trading range hypothesis. We're on a trend. Now, it's blasted up. We have a gap and go up, increase in volatility. All those things are topping signs. And at the start of the leg down, we have a gap which remains unfilled. Now, what this is a sign that from the close to the open, which is 1 hour, that market moved that much. That's huge. So what that tells us is that at that point, everyone at once is dumping their long position. So at that point, we can say that even though we have a previous breakout, geez, it's holding long here is probably going to be a bit greasy. And so anyway, we've got a substantial pullback. We've got a very strong move up off the lows. So we have 1, 2, 3, 4, 5, 6 bars in a row of 6 up days in a row, and we have a choppy move down. Now, if we look carefully before we zoom in, we can see that this bar here doesn't quite get to the low there. So what we have is the market's gone up 6 days in a row, and it's gone down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Gone up 6 days and gone down 12 days, but the 12 days down have not taken us as far as the 6 days up. The obvious conclusion for that is that the market is finding it easier to go up than go down. I think that's an uncontroversial statement at this point. Now, this bar here, we have a strong rejection of the lows. The market has tried to go down and instead closed at the highs. We've got a little of this up down thing here, which is, in technical terms, this is a hidden retest of the lows. So usually at any major low, the market will attempt to go below one more time and just exhaust the selling pressure. So we see that on a weekly basis here. It's gone down, retested this low. That test should be regarded as a pass or fail. Now we have another hidden test on the way up, which is here. Now, let's look at these last. This is a partial day, so don't take too much notice of this one. The last couple of days, down, 2 ups, down, 2 ups, down, up. What we have when we have this down, up, down, up, down, up, down, up crap, what we can assume is that we're in what I call choppy bullshit market, which is really a trading range. So in a trading range, what is the optimal strategy? Because all the evidence is pointing to the fact that we're either about to start a new leg up, which is a possibility, or we're gonna top out about here and have a trading range. In any case, if we look at where we can get long, right now here, the only place that it makes sense to have a stop here is just below this bad boy right there. Do we have decent risk reward to get us up to the top of the trading range? And if you work out the odds, we really do. And I just want to show you the trade that I took. I took it long on the break of this high here a couple of days ago. I'm still holding. I'm fairly comfortable holding. I've got a target just below the top of the trading range, and we've got 2-to-1 risk reward ratio. So I would say that this is roughly a 60% chance of working, 60% chance of a 2-to-1 risk reward, a 60% chance of doubling your money. You take that every time, right? So that's what we do. Thank you.